Palantir started as a secretive government surveillance tool built in the aftermath of 9/11. Today, it's one of the most explosive AI stocks on the market, up over 20 times since its IPO low, and right now, Wall Street is split right down the middle. Some analysts have price targets of $230, others say $50. So who's right? Let's go through it like an investor. Most people have no idea what Palantir actually does, and that's part of why it's so misunderstood. At its core, Palantir builds software that helps organizations make sense of massive, messy, complex data and act on it in real time. It has three flagship products: Gotham, built for intelligence and defense agencies. Think battlefield targeting, counterterrorism, threat analysis. This is where the company was born. Foundry, an enterprise data operating system for corporations, used across manufacturing, healthcare, finance, automotive. AIP, the artificial intelligence platform, launched in 2023. This is the game changer. It lets organizations deploy large language models directly on their own private data, securely, without sending anything to the cloud. AIP is the reason Palantir went from a niche government contractor to one of the hottest AI names on the market. Let's talk about the growth, because it is legitimately jaw-dropping. Full year 2025 revenue hit $4.48 billion, up 56% from the prior year. That's a business that nearly doubled in 2 years. Q4 2025 was the headline quarter. Revenue came in at $1.41 billion, up 70% year over year. EPS beat expectations by 19%. CEO Alex Karp called it indisputably the best results in tech in the last decade. The real story inside that number? U.S. commercial revenue, meaning private businesses, not government, grew 137% year over year to $507 million in a single quarter. That segment barely existed 3 years ago. Total contract value bookings surged 138% to $4.3 billion. Net dollar retention, meaning how much existing customers are expanding their spend, hit 139%. That's a company customers can't stop buying more of. Management has guided for $7.18 to $7.20 billion in revenue for 2026, roughly 60% growth again. Here's what makes bulls so fired up. 1. The AIP bootcamp model. Palantir doesn't do traditional enterprise sales. They run intensive workshops where a company's own team builds a working AI application on their data in days. Companies see results immediately, then sign multi-year contracts. It's a sales motion that collapses the typical 18-month enterprise cycle down to weeks, and it's creating serious stickiness. 2. Government is a moat, not a ceiling. Palantir is embedded in the Pentagon, the Department of Homeland Security, the IRS, the U.S. Army's Titan targeting program, NATO. Defense budgets are growing globally. Geopolitical tensions are driving AI modernization urgency. Palantir is the software backbone of the modern military, and you don't rip that out. 3. The ontology advantage. This is Palantir's secret weapon and most underappreciated asset. Their ontology layer, essentially a knowledge graph of how an organization's data, decisions, and actions connect, is what makes AIP so powerful compared to competitors just dropping an LLM on top of a database. Once you build your operations into Palantir's ontology, switching costs are enormous. 4. The numbers back it up. A Rule of 40 score of 127, meaning growth rate plus profit margin. Historically rare for a company at this scale. Free cash flow margin of 46%. This is not a money-losing startup burning cash to grow. It's profitable, generating real cash, and still accelerating. Now the part every bull needs to sit with: valuation. This is the elephant in the room. Palantir trades at roughly 200 times earnings, price to sales near 50 times forward revenue. Analysts at RBC have a $50 price target. The legendary Michael Burry, of Big Short fame, has actively shorted the stock, calling it an emperor with no clothes. Bears aren't saying the company is bad. They're saying the stock is priced for absolute perfection with zero margin for error. Insider selling. Over $137 million in insider stock sales in a 90-day window, with zero insider purchases. When the people who know the company best are selling aggressively, that's worth noting. Government deceleration. Government revenue, historically Palantir's most reliable segment, is expected to slow from 70% growth to around 42% in 2026. Commercial has to pick up that slack. If commercial growth normalizes faster than expected, the whole thesis cracks. Competition is coming. Google's Gemini for government is expanding Pentagon access. Microsoft's Azure AI, Amazon, and a wave of enterprise AI startups are all chasing the same market. Palantir's moat is real, but it's not invisible. So where does this leave you? The core question with Palantir in 2026 isn't whether the technology is real. It clearly is. The question is, how much of the future is already priced in? If Palantir hits its $7.2 billion revenue target in 2026, continues commercial acceleration, and keeps expanding government contracts globally, the stock probably has room to run. Bulls at Wedbush see $230. Citi recently upgraded with a $235 target. But if growth decelerates even slightly, if a major government contract is lost, or if rates spike and investors rotate out of high multiple growth stocks, the stock could fall 30 to 40% in weeks. That's not a prediction. That's just math when you're priced at 200 times earnings. Palantir is a high-conviction bet on AI becoming mission-critical infrastructure for governments and enterprises globally. The company is executing at a level that is genuinely rare, but the entry price matters enormously. For long-term believers in the AI operating system thesis, it remains compelling. For everyone else, sizing and patience are everything. Palantir built its entire business on helping people see what others can't. The irony is, figuring out whether the stock is a buy right now requires the exact same skill. Do your own due diligence. This is not financial advice. Drop a like if this gave you a clearer picture. Subscribe for more deep dives, and tell me in the comments, are you long PLTR, or do you think the valuation is pure hype? And that's a wrap on today's video. If you stuck around to the end, you're already ahead of most people. Seriously. The fact that you're here, learning, putting in the work, that matters. The market will open again tomorrow. The question is, will you be ready? Stay covered, stay strategic, let your money fly. Everything shared on this channel is for educational and entertainment purposes only. I am not a financial advisor, and nothing you hear or see here should be taken as financial advice. Always do your own research and consult a licensed professional before making any investment decisions.